Happy New Year, Mark. See your screen, buddy. Waiting to hear
you're still
the
muted,
voice.
Mark.
Okay, I'm unmuted
there
now.
you
Hi,
go.
Dale. Hi,
Yeah,
everybody.
you're good.
Hi, happy New Year, Mark.
Yeah, likewise.
Hey, Mark. Welcome back.
Yeah,
good to
thank you.
have you. So, okay, what are we going to start with? Looks like some cycle work and S&Ps. Before we get going, you're still looking for maybe strength into late March or April, and then the cycles turn negative.
Yeah, I'm not sure if we're going to be able to make it that far without at least correcting a little bit of what we've seen. I think this, we've seen a level of sentiment just getting very dramatically enthusiastic, a lot of speculation, as we all know these days, of what's happening, and just a lot of complacency. I think the equity put to call has gotten down in the lower 30s. I think that's interesting. Moving averages have reached the lowest level we've seen in over 10 years. So, what I see that's interesting is the fact that we have started to break down in a lot of different, let me see if I can share a different screen, and that might make it a little easier to share.
An interesting trend line that we're tagging that you had up there.
Yeah, I'm going to share this real quick, and then I think it's just interesting.
There you go.
So, when you look at things like the Dow Jones transports, it's pretty interesting that we did, in fact, break the entire uptrend since March as of last week. And so, yes, we did hold where we needed to, but we do have quite a bit of negative divergence now. So not to be too negative, but there are some things happening, I think, under the hood that are somewhat interesting. On a weekly basis, you actually have weekly MACD is now starting to roll over for the first time also. So leading sectors like the transports and the stocks obviously are showing some evidence of getting very overdone, and the patterns in the short run are not necessarily all that great. So I was a little negative after last week, and I think what happened yesterday did officially clear that up to some extent. You could argue that the bull market is back intact. You just wonder, I still have to wonder what the shape of this wave structure is. I came into, I think, the last couple of weeks thinking there were four main things that were a problem. One was that momentum had started to show evidence of waning. Breadth had done that in the last month. We saw the summation index, McClellan summation, actually peak out in the month of December, and so you did have some evidence of waning breadth and momentum. Sentiment had been very optimistic. We started to see a lot of the cycles that I track show evidence of peaking out actually in late January and showing a secondary peak right around the 16th to the 18th of February, and then turning lower into March. And then we actually bounce into April. And the period from April to September really should be the meat of any sort of real decline. And so, we'll see what to make of it. I think it's interesting that the dollar really starting to show evidence of moving up, at least by the Dixie. That's interesting, and something that many of you likely have highlighted. But this pattern, we saw, I thought, a pretty large level of bearish sentiment, and now we're seeing evidence of that starting to push higher. So, we'll see the extent of what happens here. But we could easily see 91.5, 92 before you sort of slow down. And historically, that's been sort of a negative for equities. So.
One of our attendees is saying that because you use Ichimoku on your charts. You've been using that for a while.
I do find it fairly useful in terms of providing support and resistance that might ordinarily not be seen, and so certainly that's something to watch. So it's interesting now because you have yields showing evidence of pushing back higher along with the dollar. So that should actually be a pretty big negative for precious metals, actually, and for commodities. So that's a
What do
pretty
you think
interesting.
of, yeah, what do you think of, the big debate was after, social media, Reddit and those guys were successful squeezing a small cap GameStop.
Yeah,
And then they decided to turn their sight towards silver,
yeah,
and it's a much larger, deeper market than a small cap. It's a global commodity market, and retail was already long silver going into it. I don't think there were enough shorts to squeeze. Pretty negative day that we had
yeah.
yesterday, almost a negative week if we finish down here.
Yeah, the one thing I would mention is that gold really didn't show any
No,
type of real strength, and it really diverged substantially from what silver
yeah,
was showing. And so,
yeah, for a
I've
while.
always been taught that if the dollar is pushing higher and yields are pushing higher, then it's going to be a very tough time for the metals. So, we'll see. I think the silver chart obviously looks a lot better structurally than what you see in gold, but yes, you certainly have some work to do. And as you mentioned, CFTC data showed the large
Retail already
speculators
long.
were very long, and
Yeah,
the commercial hedgers were pretty short in the metals right now. And so I think markets like silver are very tough. The Hunt brothers learned that the hard way. When
I
you
remember it.
go after a market, and the regulators aren't going to stand for it. They raise margins pretty quickly, and
Yeah,
that will tap out the speculation. So Yellen is meeting, I know, with the SEC, and they're going to try to, I'm not sure what's going to happen and what's going to result in all of this. I think, you might end up seeing a time when the uptick rule is reinstituted, and also they might do something with regards to regulation. But, there's nothing wrong with a group of people discussing things that they like. I think if you start to show evidence of collusion, that's obviously a different story. And, I don't think they can.
yeah. How
I'm
could
all
they
for free
regulate
markets
social
and
media from everyone collectively deciding to put their buying power together? I don't know how
people are
that could be
selling
regulated.
people are selling synthetic puts, short. It's funny. You take a look at selling things under parity when a lot of these people were trying to sell calls on GameStop, and they really had absolutely no idea as to how options work. And that's my fear, is that you have a lot of new people into this market that don't understand option pricing and how to even price out calls versus puts. They just look at it as a cheap way of making money on a stock by buying a ton of upside calls and watching it work. And they don't
Yeah,
understand the deltas. And gamma hedging, I think, is a little far-fetched. I used to trade equity options on the floor, the CBOE, and there's
right.
plenty of things to hedge. If I'm a market maker and I sell 1,000 lot of calls, I can hedge that in a million different ways. I don't necessarily need to buy stock. And by having short gamma, I used to be able to trade that. It doesn't necessarily cause the kind of problems that the media would have you believe when they said, "Oh, it's a gamma squeeze and things are, the train's
Yeah,
coming off the rails." And it's important to understand, but certainly, look, an unprecedented level of volatility. I don't view it as all that healthy that people that are really not knowledgeable are coming in and trying to, thinking that stocks and everything else are moving in, ways that they can control. I think that supply demand eventually wins out, and they're going to learn the hard way that, at any rate. So yeah,
okay.
I'm not really. I don't have a lot of strong conviction in the metals. I tend to be uh, thinking that we're gonna have a move to the downside as
Hmm.
yields in the dollar rise.
Okay.
Uh, the VIX is interesting. You've had some evidence of trying to bottom out, and now you're pulling back to levels that, I think in the next 2 weeks, if the VIX continues to fall, that's going to set up for a very good opportunity to buy vol, headed into the spring, summer months. So,
Okay. Under 20, you think? If we get under 20, think that could
I don't
happen?
know that we would take out the lows of December. That would be
Okay.
truly an unprecedented. But I think you can certainly retest. Well, not certainly. I think that look, if the market's going to press higher, then I do think vol could settle down a little bit. And I would certainly look at buying VIX call spreads. I'm looking out in June, and also if you really want to speculate, you look in March and buying $20-$30 call spreads for under $1. I think that's a home run. It's a great way to. It's a way that I'm using to sort of hedge portfolios, but I'm also keeping very tight stops on longs.
Okay.
Uh,
What
Oh,
else,
yeah.
Mark?
What's interesting is that the FANG area has sort of come back to life, and we've seen
Yeah.
that of late.
It went
and
to
I
sleep
think-
for what, about 2-3 months, and then the
Yeah.
last few weeks here, they
I
started the
think-
rocket ships again.
Yeah, let me try to share this screen if I can, and let's just look at something else. So, this is Amazon, and this literally had gone nowhere for a long period of
Right.
time, and then it sort of broke out prior to earnings, and now it's settled a little bit. It was trading higher, and now most of these have come in a little bit. But most of the FANG group, you just can't really. Facebook is probably the weakest of those, where you
Yeah.
say that truly, and Google obviously is showing very good gains today.
Yeah.
Netflix, so most of these have gone sideways, but equal weighted technology, has largely been flat since the spring. We've have had pockets where this started to underperform into January. Now this picked back up. This is an equal weighted ratio of just the RYT to the equal weighted S&P, the RSP. So it strips out a lot of the large cap dominance. And I view it as being, when you see the lows of this broken, that's truly going to be a time to think that, a bear market has begun. If you take out September lows in most of the FANG stocks and large cap technology, then that's heading into a tough time. But, I think it's interesting that you are seeing pretty good strength in emerging markets, even while the dollar has been pushing up. So this is just a ratio of emerging markets versus the developed markets. And so,
That is interesting.
Small caps has started to wane a little bit, relatively speaking. I'm keeping an eye on that only because I do think that's how bull markets end, is by small caps starting to roll over. Yes,
Mark,
sir.
if I may ask you a question, I know that you're mainly a technician and an excellent one. I mean, there's no denying that. I would want to hear from you your fundamental thesis about things. I know that fundamental theses don't have a time frame because very frequently the market might take a long time until it actually plays out to what makes sense. But you're always like giving us an excellent outlook on what you think is going to happen in the market, and you're way more frequently right than wrong. But I want to hear your personal fundamental thesis, if that's okay with you.
Well, I look, I only got to level 2 of the CFA. I found out the hard way that, you don't highlight with a black magic marker. So, I never got my official badge, but I went into the technical analysis about 20 years ago and never went back. I'll say that, I feel that the Fed's ramping up the balance sheet has fueled this rise in assets. Personally, it has created a lot of the inequality that has caused, a lot of the unrest that we see, and that's going to take a long time to unwind. I think largely the earnings have come in better than expected. I think it's been sort of a home run. I was frankly shocked, as I think many people were, that the markets could be as resilient and the stock market could really avoid the downturn in the economy. I still view the economy as being at a very weak level, and we're not going to really... Of course,
we have to take into account that for the economy to be window dressed, globally, we had to accumulate unprecedented amounts of debt within a short period of time, right?
Correct. I obviously have personal opinions on this, and it doesn't mean that I'm right. And so it's always tough to quantify fundamental thoughts because people are biased in their opinions. I would view, it's going to be very difficult to continue to ramp up spending to the degree that the new administration is doing without causing real problems with the deficit. And I just think already that there's only a certain amount that we can spend our way out of this. And so, that's my personal thinking.
Yeah,
I think that's going to come back to roost where
it's
been done since the beginning of time. But the key is if yields start to ramp up dramatically, I think that started 10 years ago after the last decline from 07 to 09. And during Obama's presidency, and I think productivity started going, we really started to ramp up spending on entitlements, and that really crushed our productivity. And then, the U.S. has not been able to grow at larger than 2% for a long period of time. I personally
If
view
we
that.
believe the 2%, because
Right.
my personal belief is that the GDP growth is also globally window dressed by the simplest mathematical method, which is masking a lot of the inflation, which, as you very well know, it's the last mathematical thing you put in the equation, meaning deflating, nominally what you have to compare it to last year. So I think that, at least part of the growth is understating last year's inflation. Anyhow, I'll let you go back to.
That's
No, go ahead, wrap it
that's
up.
interesting, and I think that in general, it's tough for me and all of us that look at the market on a day-by-day basis to really truly understand when that's going to become the tipping point, and looking back and what caused it. But I do think that the debt is out of control. The balance sheets are very bloated. I think when they start to dial that back, the market's likely going to turn down. I think that inflation might not be a big deal for a couple of years. If you look at the longer term cycles,
Absolutely.
I see 2025, 2026 as being the time of inflation, not really right now.
What scares me the most, Mark, is that now it has become a consensus that debts and deficits don't matter, which is so weird, right?
Well, I think that's always been the case, because we've always, there's a certain group of people that always say they do matter, but in retrospect, we've always been able to spend our way out of it, and it's been fine. And the market's rebounded, and that's helped the economy, and things have snapped back. But I don't know if that's always going to be the case. At any rate, yeah, I don't know how to debate fundamentals, only because a lot of it depends on how you view the economy and whether you believe in the supply side economics, and how to really fix things when they're broken. I just don't know that we're going to be able to grow the economy and have a robust second half. I view this time in the first half as a time when markets could in fact peak out. Before you see the GAN mass pressure index on the bottom part of this chart, and I think this is interesting.
Yeah, what is that, Mark? I'm losing your volume a little
This
bit. The
is
GAN mass pressure. What is it?
So this is an overlay, Dale, of 60, 40, 30, 20, and 10-year cycles, all on top of one another. So you look at, and going back over time, if you take all these longer term cycles and overlay them, then this tends to approximate, and it's very uncanny the way that, you come into certain weeks and the market just turns down and people don't have any idea. And then they go back 20 years ago and you say, oh, look, the market peaked at exactly the same day, or look at 30 years ago, or look at 40 years ago. And so this actually shows a peak for the market right around the 11th of February of this year, a move straight up. It shows a choppy period, but really a down bias into March, which I think we have. And then rallying up into April, and then this period from April to 15th, really into September, should be the correction.
Okay. Yeah, that's what you were talking about last time, only this time we have a visual on it. So, yeah, nice, Mark.
So this is interesting. We'll see. Last year it worked out very well, and we had a decline into the spring, and then it rallied literally all year long. And so, we'll see if that matters or not. But I do view us as really approaching sort of an important time. It's going to be tough for us, the S&P, to get up above 4,000. And as you get into, I think the middle part of February, the combination of, the attempted impeachment, I don't think will sit well, and could in fact stir up further unrest. And I think that the cycles, we really got our first dose of things turning down last week. And while the equity indices have rebounded, a lot of the momentum has not. And that's really—
Speaking of doses, Mark, what's your view on the vaccination personally? Are you looking forward to having it? Are you going to pass? What are you going to do?
I had COVID in October, and it was a very quick recuperation for myself and my son. And so I've known a lot of people that have gone through that, and it's an unfortunate experience for a small percentage, and a lot of people tend to recover very quickly. So I don't see the need for myself to have the vaccine
Okay.
probably at least until the summer. I sort of want to wait and see how things all play out. And
Okay.
so
Thanks for
I
sharing
think
that.
that we're largely past the time of real peril. I think that there's millions of vaccines out there available now, and it's just you just have to figure out how to get it. And so I think that by March we'll see that this is largely I think we'll have the path to recovery in my own view.
Okay.
So I don't know.
Isn't that funny that during this whole process the market's going up, and when you think the path to recovery on COVID will really begin to take shape is when the cycles start to turn negative again. As people stop worrying about COVID, maybe they start worrying about the economy.
I honestly never give people credit for being able to really have that much effect as to being able to manipulate markets. I don't believe in a small group of people at the bottom buying and then the top selling. I think the buying dries up. So people being worried about COVID, that's been intact for a year, and markets have been able to rally right through that. Just like people were concerned about Trump's rhetoric, and it didn't have any effect on the market. So I think that people invent things to be concerned about, and yes, of course they're right, but it's more, does this affect stocks in the way that we all think it should? And I would argue, absolutely not. So, this is what happened the other day. We saw markets rally up through 3780 in the S&P. So for me, that's certainly a very big area. It's tough to make this as a 5-wave decline. To me, it still almost looks like a 3 unless you count this as being, it'd just be very strange looking. So, I don't know. I think that this is a little choppy range we've been in since this time 24 hours ago. Many people think the market's gone straight up. It's actually been sideways since this time yesterday morning.
Yeah.
So yeah, getting
so
up
what
above.
What are this grid? What's it represent to you?
The grid?
Is it time?
The grid. I'm sorry. You're not even. Yeah. I'm sharing the wrong.
Oh, okay. Yeah. So we're on
that
S&P with the grid. All right.
So here's the S&P. This is what I wanted to show you. Is that here's the decline that we saw last week, and it's tough to really make this into a 5 in my view. It's most likely still a 3. And here's our 3780 level that we broke out. And here's in an hourly chart the last 24 hours. So yes, markets are rebounded, but it's most of this happened from the 31st when we bottomed, and obviously getting up through this acceleration yesterday.
Could this be a B wave ending here? And just like the first break was an A, B, C for A, and this rallied B, and we have C to the downside?
Sure. Yeah, I think that if you put this as being a 5 here, and this is A, A, B, C, then this is a 5-wave C, but at this point, we have seen sufficient rolling over in a lot of things. So I just really want to try to just keep a very close eye on any move that gets down to, towards recent days low. Here's how I view the S&P. And using Ichimoku, you can see that we actually bottomed at a level right where we needed to.
Look at that.
At 3750. And so this is really an area of concentration for me in terms of, can this market continue up or not. We could easily pull back and then have a final push. But we're in an area where it's going to be a lot choppier. And if anything, the momentum has really started to, you look at what's happened with RSI dipping down to the lowest level since November. You have seen a rolling over in MACD. So of course, the FANG stocks have certainly rebounded. I don't disagree with just reducing risk, over the next 4 to 6 weeks, and think that we likely are going to turn down between now and March, and then any sort of rally out of that, should really be something to consider selling into.
Okay, Mark. So, you want to show crude? Yeah, crude.
I just think it's pretty interesting that we managed to really snap back yet again, rally out of that.
It had the risk off last week had no impact on crude, which is somewhat different.
Yeah, we sort of churned, but you can make the same argument with S&P. We did see daily weakness, but we didn't see weekly weakness. And so, for me, that's the main thing is by, this is You know, you want to see S&P truly, I would argue, you know, let's see some evidence that this matters. Momentum is certainly starting to wane a little bit, but,
Yeah.
you know, I'm not one for having a real need to have to pick the top. I think, you know, I have plenty of stocks. I'm happy to make money as stocks go up, but there are certain risks in the market now that certainly weren't present. What I'm looking for specifically is a sign that defensive sectors are coming back. And we did see some evidence, a little bit of that a few weeks ago, and then largely that's disappeared as tech has roared back. And so when you see complacency, breadth and momentum rolling over, seasonality, you know, that's important. I think, you know, the cycle stuff that I look at all really started to turn down. You know,
Last week.
Maybe I can show a little bit of that real quick. Let's see if I can. Yeah, while we have it, let's see. This is interesting. You'll like this.
Community's thanking you for your great analysis, Mark.
So yeah, I just okay. I'm going to stop sharing on the one, and I'm going to try to reshare on this other screen that will show you
Dale,
Yes.
a few things. Any questions in the meantime?
you can definitely take another 5 minutes. It's not a problem.
Okay. Thank you. All right, so let me just, I'm going to stop sharing here, and I'm going to reshare on this other screen right here. Okay, so here's just a weekly chart of some of the most prominent cycles that we've seen in the last 100 years. And so this pink line is where the composite starts to turn down. And so we saw that back in 2000, really right at the top. We saw it back in 07. We saw it in 2014. And of course, markets didn't go straight down, but they did go sideways for almost 2 years. And we did decline about 10 to 15% from the top. And now they're actually turning down again from now into late 2022. So the amplitude is shown in pink. It doesn't mean we have to retest the lows, but this is a pretty prominent turn. And I looked at this going back since, you know, the mid 70s. And, you know, you do see, you know, this worked very effectively during times like the mid 70s debacle when we declined almost 50% down to the lows in 74. You look back in like 1929. And so I rate these cycles based on strength and Bartel score. And, you know, for me, this is a pretty prominent year, and I think it is going to be a down year, but I think that's, it's always tough to break the back of a bull market. It does take time. And so technology really should be, you know, the key in all this in terms of, you know, but I just want to show an overlay of how this looks in 2000 and 2007. And so now it showed, and the daily cycles actually were pretty accurate in showing a peak last year and then rallies. And so, you know, I don't know. I think that it could set up to be an interesting year. The mark stuff is literally all lined up at this point based on a weekly chart. And let's see if I can show this. Can you see the this is a software called Symbolic by
we've got the DeMark up there. And Google now, Google Weekly.
Oh, it's not shading. Oh well, we don't have to cover that this time. We'll do that next time. Yeah, look. So I have any further questions? I'm happy to take them. But you know, I think this next couple months is going to be a little choppier, I think, than most people think. Even though we've rebounded the last couple days, and technology is obviously going to be very important. But just keep watch on momentum, because as this S&P chart shows, momentum in transports and many of the popular indices has really started to you know, roll over a bit, specifically because of last week's sell-off. And so you want to keep a watch on weekly lows. And you know,
appreciate you, Mark, and coming in. What's the best way for people to follow you? Of course, on Twitter, they could follow you at Mark Newton CMT. And how about your website?
Yeah, so I run a service called Newton Advisor. I provide technical analysis to institutions, but also to individuals. And let's see if you can send an email to info@newtonadvisor.com, advisor with an R, no S, or just go to newtonadvisor.com. Happy to put you on a trial of my work. I put out 2 pieces a day and reports every weekday. We do webinars every Thursday around 1 o'clock, and I do a very intense dissection of all markets, be it equity, commodity, currency, treasury, and happy to see if my work can be of help to you.
It is every time you come here, my trading warrior brothers. Thank you so much, Mark. I'm hoping
Thanks,
this is one of your better years here in 2021.
Yeah, no, I appreciate it. I think it was a tough year for a lot of people in a lot of ways, but financially, I think I was blessed. I had one of my best years ever. I was up over 250% last year, so I'm hoping to replicate that.
Wow.
We'll see if we can do it.
Yeah, I'm calling the Guinness Book of Records right now for you. So congratulations on that. And thanks again, Mark. Let's get back together in the spring and see how things are playing out with this dominant GAN cycle. Okay?
Thanks, everybody. Take care. Have a healthy,
Newton,
happy
everyone.
rest of the week. Take care.
All right, that's a wrap, Steve. So remember, don't just count your pips, count your blessings, and don't forget to join Blake and the team in F.A.C.E 2.0 for the bias chart and the rest of the team's analysis that they'll be batting around the markets. And we'll see you guys tomorrow. Good hunting the rest of the day. Thanks, Steve.